So hello everyone and welcome to the latest episode of the Sharesify Talk Shares podcast, and I'm joined as ever by my colleague and friend Ian Conway. Hey Ian, how you doing?
Hey Steve, very well thanks, good afternoon.
So there's tons of stuff to get through. I know Ian's been particularly gawping at the US futures markets. Tell us why, Ian.
Well, this is interesting, Steve, but look, we've got to talk about Kevin, okay? We don't normally talk about things like the Federal Reserve and rate cuts and so on, but today is different. Trump's going to announce his pick for Fed chair later to replace Jerome Powell, who retires in May. Now, the name on everyone's lips has been Kevin Hassett, his White House economic advisor. Yet, overnight, suddenly, the odds on another Kevin, a guy called Kevin Warsh, have shot from 10% to 90%. This is on poly markets. This is a growing market. You can bet on political and economic events.
Yeah.
So this guy Kevin Warsh has come out of nowhere. You're saying, who is he? You'd be absolutely right. He's a former Fed governor, and nobody really knows about him. But what they do know is, yes, he favours lower rates, but at the same time, he's a huge hawk, and he doesn't like Fed intervention. He is actually very much in favour of a smaller Fed balance sheet.
Yeah, and that's very much up Trump Street, isn't it?
Well, actually, no. He wants the Fed to keep bailing the markets out. And if you think since March 2009, there's always been this thing called the Fed put, which is if the markets get into trouble, the Fed steps in and injects liquidity. And that's why, with this mention of Kevin Warsh, that's why markets, futures markets in the US are down. It's why Asia's down, bonds down, gold's down. Everybody's now having to rethink maybe Fed policy.
Yeah.
And it
So to put a bit of colour on that, so ahead of the Wall Street Open today, I think the S&P and the Nasdaq Composite are looking at about a 0.3% decline. So we'll see if that plays out. We're not talking about a major sell-off, but we're talking about a negative sentiment day.
It's improved. It's improved. I mean, when we opened this morning, the markets are indicated down 1%. Now, you're still going to get rate cuts. The market's still betting on 2 rate cuts next year. But the issue is, in the US, once Powell has gone, they reckon there'll be 2 rate cuts in the US. We actually had no fuss, but we had a US Fed meeting this week, and rates were held. No big surprise. Markets went up. The issue is there is a very strong correlation between Fed liquidity, increasing Fed balance sheets, and the Nasdaq. It's ridiculously high correlation. So if you take away that liquidity, what happens? That's the big question. That's why stocks and investors are on the back foot at the moment.
That's probably enough macro for the time being. There's been loads of stuff going on this week on the company front. Of course, we've had those really big tech earnings, and they've been a real mixed bag. Microsoft has been beaten up about 10% down since the results came out, and it was literally a case of the market was a bit miffed that Azure growth wasn't as strong as they really wanted it to be, and it's trapped in this cycle of it doesn't have to meet expectations. It's expected to beat and beat handsomely. So it did beat expectations. However, it was very, very marginal. So that pretty much explains why Microsoft got a bit of a whack-in. Today we've had, overnight we had Apple, and much the same as Tesla, a bit of a so what really. Nothing much has changed the view of the markets to suggest that Apple shares should be higher valued than they currently are. The big winner was, of course, Meta. Overnight on Wednesday, it's up about 14% over the course of the week. Really big jump. What it's really demonstrating is that its vast capex into AI is really paying off in terms of ad revenues. So that's the real big winner, and the big message is it's captured the imagination of investors because they are seeing a direct correlation to spending here today on AI, and that's going to beef up our revenues and profits into future quarters. And that's really what markets want to see now. We want to see a real return from these capex budgets. What else has caught your eye this week, Ian?
I think highlights for me, Steve, again, you've got to say defence stocks. Look at Lockheed Martin, another all-time high. We had positive news out on Avon and Cohort as well today. I think Lloyd's, upping its return on tangible equity forecast, upping the dividend. That went down well with investors. Probably I'd say 3i. It had a terrible update last time round and lost a load of ground. So
Right.
it's clawed most of that back with the latest update.
That's a big player in the private equity space, isn't it?
It is, and probably 2/3 of the portfolio is made up of a Dutch convenience retailer called Action.
Right.
Now, it's trading at a big premium, or it certainly was trading at a big premium before the last update.
Yeah.
But it's back to trading at quite a decent premium again on the back of this week's update. So
Yeah.
I think that's notable. It's in terms of lowlights, I think you've got to look at Ocado. Sobeys in Canada rowing back on opening CFCs. We saw this in the US with Kroger, who decided to row back on their CFCs. You know, the company says it wants to be cash flow positive by the end of this year on its Ocado software platform. Frankly, I think that's going to be a
Looking
struggle.
a bit doubtful.
I really do. Yeah. I think the other probably lowlights would be Marston's disappointed with Christmas sales. Most of the pub groups actually did pretty well over Christmas. Marston's a bit disappointing, and LVMH with its downbeat guidance. That stock dropped to a 3-month low this week.
Well, there's been some really exciting news to pep up markets, and that of course has been all around potential IPOs. Now underline the word potential. So we've had, of course, speculation all over the place about SpaceX might IPO in June this year. And June is interesting timing because it coincides with Elon Musk's birthday on the 28th of June, but it also coincides at the early part of the month with the rare alignment of Mercury, Venus and Mars.
I wondered if you were going to go there. I
don't think Trump has been reading Mystic Meg or talking to Russell Grant. It's literally a case of look at what the company does and find a good marketing employee to hang that IPO on. So it'd be a really exciting IPO if it does get away. The speculation is about 1.5 trillion in terms of market cap. That would be the biggest valuation company to IPO ever by absolutely miles.
Yeah.
So there's a lot to say in how that might play out, and of course you can't hold these figures to ransom. They could change massively over the course of the coming months. But the other big news as well, of course, is speculation that later in the year we may see ChatGPT owner OpenAI also list. Now, again, speculation is he wants to raise about $100 billion, which would be, again, an enormous fundraise. But this tells you how much capital is invested into AI and all of the different projects it's doing. So that's looking at about an $850 billion valuation. So straight away, it would swoop into the top 15, 20 S&P companies.
Yeah, correct me if I'm wrong. Didn't I see a headline saying that OpenAI and SpaceX could merge?
No, it was Tesla and SpaceX could merge because they're both obviously the Elon Musk companies.
All right, gotcha.
Whether there's any kind of value in that talk, who knows? It's completely speculative. Robots in space, you can see some kind of read across. I'm not sure how valuable Tesla cars would be to a space rocket company.
No, I can't see it. But another busy week again next week, Steve. Mag 7, two of yours, Amazon and Alphabet, and Palantir. And I was looking at Palantir, and it's a $360 billion company.
Yeah.
I mean, that's almost twice as big as Disney, and you think Disney's a big company.
Yeah.
These things are
interesting.
enormous.
You'll get a compare and contrast on Monday because Disney results are out Monday during the trading day in New York. Palantir's are after hours, so we'll find out more about them on late Monday night or Tuesday morning. But I mean, you've got AMD on Tuesday, you've got Pepsi, you've got Pfizer, you've got Merck in the biotech space, you've got Eli Lilly, AbbVie, GSK over on this side of the pond, Google, as you mentioned, Arm Holdings, which many UK investors will remember fondly from many years ago, used to be listed in London, of course, and previous favourites of Terry Smith's Fundsmith. So Unilever, one of his top 10 holdings, Google, one of his top 10 holdings, or Alphabet, as I should say, and Philip Morris on Friday, no longer in Fundsmith's top 10, but I've got a sneaking suspicion that he's still quite a big fan of Philip Morris.
And also here we'll be looking at Filtronic. Got a call with them on Tuesday.
Right.
Also related to SpaceX, of course, because
absolutely. It's gone bananas, hasn't it? Because it signed about 4 or 5 deals with SpaceX over the course of the last 18 months or so, and its shares have just gone bananas. But there is a word of caution. I mean, it's got that single client risk. If SpaceX suddenly decides to cancel these contracts or walk away or whatever, it would absolutely destroy the valuation of Filtronic. So it's something to bear in mind with Filtronic.
Yeah. Well, we'll catching up with them on Tuesday.
Indeed, great stuff. Well, I think that's probably about a wrap. Anything else to add there, Ian?
No, I think that's it, Steve.
Well, that's brilliant stuff. As usual, get in touch with us on editorial@sharesify.com. We'd love to hear from you. If you're a trust company or fund and want to get involved in these podcasts, just drop us a line via that email route. So that's the end of this week. Until next week, all the best. Take care.
And have a good one.
Bye-bye.